President Trump's impending tariff announcements have sent shockwaves through global markets, igniting a potential powder keg of retaliatory measures and threatening a full-blown trade war. While the president assures a very kind approach, critics paint a starkly different picture, foreseeing a dangerous chain reaction with far-reaching consequences for the global economy. The looming threat of reciprocal tariffs has already triggered a flurry of defensive maneuvers and heightened anxieties amongst international trading partners. The stage is set for a dramatic showdown. Trump's planned tariffs, a broadside aimed at leveling the playing field, as he claims, are anticipated to elicit swift and decisive countermeasures. This isn't a mere squabble, it's a battle for economic dominance, with global trade delicately balanced on a knife's edge. The stakes are incredibly high, impacting not only multinational corporations, but also everyday consumers worldwide. Markets are on high alert. The uncertainty surrounding Trump's actions has already manifested in jittery market performances. While the Dow and S&P 500 managed modest gains, key European and Asian indices experienced significant drops, reflecting the widespread unease. This volatility underscores the pervasive fear of escalating trade tensions, creating a climate of apprehension that extends beyond financial circles. The response from key players is both swift and resolute. China, South Korea, and Japan have proactively strengthened their free trade agreements, demonstrating a united front against potential economic isolation. This collaborative effort aims to mitigate the impact of potential U.S. tariffs and solidify their trading relationships. Simultaneously, China and Canada have already implemented counter-tariffs on U.S. goods, with the European Union poised to introduce their own retaliatory measures mid-April. This preemptive strike signifies a clear determination to defend national interests and challenge Trump's protectionist policies. The expectation is that this is merely the opening salvo in a broader exchange of retaliatory measures. The unpredictable nature of Trump's actions leaves economists scrambling for answers. Ryan Sweet of Oxford Economics aptly summarized the sentiment: "Expect the unexpected." His assessment highlights the inherent uncertainty surrounding Trump's decisions and the potential for unforeseen consequences. The largest offenders, as Sweet puts it, are bracing for impact, with the potential for a cascade of repercussions. The ripple effects are spreading rapidly. Countries are actively seeking to minimize their vulnerability. Reports suggest India may lower some tariffs to soften the potential blow of the impending trade war. This proactive stance reflects the global scramble to adapt and mitigate the damage. The situation calls for pragmatic solutions and strategic realignment of economic partnerships. The crisis is prompting a reevaluation of global economic strategies. Christine Lagarde, president of the European Central Bank, has urged Europe to accelerate its path towards economic independence. Her statement, delivered on French Inter Radio, emphasizes the gravity of the situation, characterizing it as an existential moment for the European Union. This underscores the profound and potentially transformative impact of Trump's trade policies on the global economic landscape. While some attempts at diplomacy are underway, the overall tone remains tense. British Prime Minister Keir Starmer reported productive negotiations with Trump regarding a UK-US trade deal, offering a glimmer of hope amidst the storm. However, German Chancellor Olaf Scholz's statement, while expressing openness to compromise, also affirmed the EU's resolve to respond firmly to any aggressive trade actions. This delicate balance between diplomacy and firmness reflects the complexities of navigating the escalating trade conflict. The global community finds itself at a crossroads. The potential for a protracted trade war looms large, casting a long shadow over global economic stability. The interconnected nature of modern economies means that a trade conflict in one area is unlikely to remain contained. The knock-on effects will likely be felt far and wide, impacting supply chains, consumer prices, and global economic growth. The consequences of a prolonged trade war could be devastating, potentially triggering a global recession and exacerbating existing social and political tensions. The situation demands careful consideration, strategic responses, and a commitment to finding mutually beneficial solutions to prevent a descent into a damaging and potentially irreversible trade conflict. The coming weeks and months will be critical in determining the ultimate outcome of this global economic showdown. The world watches with bated breath,